Welcome back to my daily reports market analysis videos with me, Richard Perry, market analyst at Hantec. On Monday the 17th of August, we're going to look at dollar yen now, which has started to creep back lower again. It had that fairly impressive recovery actually in the last week and a half, creating that higher low at 105.30, broke up through 106.60, which was an old basis of a floor which could have been resistance, or should have been resistance of overhead supply. It sort of petered out around 107 figure and has now started to form. You could argue that this three candlestick setup is not a million miles away from what would be an evening star candlestick setup, where you get the strong in candle, a second sort of neutral candle, and then a strong third candle to the downside. That sort of indicates a reversal pattern, and considering we're falling away again today, confirming the trend breach and back below 106.60, it's a fairly sort of negative setup that we've now got developing through that dollar yen chart, and we could now start to see the market falling away. Now if it moves underneath 106 figure, I think that would be a key moment, because it was such an important level of resistance to break out through. The market had sort of thought about that and so consistently a couple of weeks ago, and then on the decisive breakout never looked back. But subsequently, having rolled over at 107 figure, a move back underneath 106 figure would be a fairly negative development, I think. It obviously then would put pressure on the 105.30 level, which is that reaction low that we saw a couple of weeks, sort of a week and a half ago. But as you can see on the hourly chart, we're starting to form a more corrective configuration. That RSI on the hourly failing at mid-40s, falling back to 30. MACD lines, look at those, crossing back lower, seemingly crossing back lower underneath the neutral line. Also stochastics sort of faltering at 60, so that you're starting to get corrective configurations, and where you could argue a top pattern over the past 4 or so sessions on a move below 106.45, which incidentally was a breakout point. So that old support had become that old resistance had become supportive, but breaking down that today starts to again look a little bit corrective looking. So we are starting to see this move developing into something a little bit more negative, starting to see intraday rallies sold into, and putting pressure, I think, on that 106 figure level. And as I said, a closing move below that would be a pretty significant shift in sentiment once more. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.